I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the .99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. There's if you want Bitcoin, you need to get it between now and then because the last 1% of Bitcoin comes out over 100 years. Um, yeah, there's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
For Saylor, bullish is not a short-term trading slogan. It is a calendar, a finish line, and a closing window. He frames Bitcoin as a once-in-history rush where almost all the supply will be spoken for by 2035, and anyone who wants in needs to act long before the last fraction is mined. Gold is not the finish line in his mind. It is a hurdle to clear on the way to something much bigger. When he says he is more bullish than ever, it is because the path to that 2035 world is becoming clearer to him, not fuzzier. The volatility and the pullbacks sit on top of that deeper conviction about supply, time, and adoption.
I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago that you've now got an extraordinary risk reward opportunity. Now is a much better time to invest. You know all the things that you wanted to happen have happened. The market sentiment is negative, but that's an opportunity for the equity investor that makes their own decisions.
Here he turns the usual fear narrative upside down. Prices have wobbled, headlines look grim, and sentiment is wary. But from his point of view, that is exactly when the setup is best. Regulation is clearer, institutions are in, and the infrastructure is stronger than it was a year ago. The gap between fundamentals and mood is what he finds exciting, because it means people are still pricing yesterday's fears into an asset he thinks is evolving fast. To him, that disconnect is not a warning sign. It is the reason he leans in harder.
So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. Yeah, the vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s.
That is another piece of why his tone sounds so confident. He no longer talks about Bitcoin as a one-size-fits-all bet. In his view, there is now a menu from raw Bitcoin for purists to leveraged equity to hybrids that smooth the ride. When he says he is bullish, he is not just talking about the coin, but about an entire capital stack built around it. In his mind, the story is no longer, can Bitcoin survive? But which instrument fits your risk and still taps into the same digital wave?
But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit is got a tax equivalent yield of 4 times higher than bank credit. You know, you can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred.
When he zooms out like this, you can hear why he thinks we are very early. He is not just pointing at the Bitcoin price chart, he is looking at the rise of digital capital itself, a pool that barely existed 15 years ago and is already in the trillions. On top of that, he sees a brand new layer of digital credit, paying yields that embarrass traditional bank accounts. In his mind, these products are the bridge between the old world of savings and the new world of Bitcoin-based finance, and the fact that they are being adopted at scale is yet another reason his optimism has grown, not shrunk.
Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. Two-thirds of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon.
This is not the language of a trader guessing where the market will be next month. He is laying out a 20-year spreadsheet in his head and treating 30% annual appreciation as the baseline assumption. Equity holders, in his framework, ride the wild swings in exchange for a bigger slice of that compounding. Credit holders get a smoother, tax-deferred stream that still beats the old money market world. To Saylor, this is not a gamble. It is math combined with engineering. And his bullishness comes from believing that math is on his side over long horizons.
Well, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy one Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience.
This is where his worldview shines through most clearly. To him, Bitcoin is not a tech stock or a speculative token. It is a slice of the global free market with no HQ to bomb, no CEO to fire, and no central bank to debase it. When currencies wobble, governments stumble, or disasters hit, he sees that as one more push factor driving people toward neutral digital capital. That long list of risks he rattles off is not meant to scare people about the world, but to highlight why he thinks Bitcoin sits outside many of the usual failure points.
Right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that a billion AIs are going to think a billion times faster than us human beings. You can see a world where a billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So in a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off.
For Saylor, Bitcoin sits inside a much larger story about digital intelligence. He is imagining a future where robots build, AIs think, and value moves at light speed. In that world, slow, paper-based money feels absurd to him. The same forces that are making cars drive themselves and factories run autonomously, in his view, demand a native digital asset that can keep up. His bullish stance on Bitcoin is tightly woven with his bullish stance on that whole intelligent, automated future.
Sometimes they don't have a minute. Oftentimes I think, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence. And then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words.
That is why you see him leaning into memes, AI art, and punchy slogans. He knows the world is drowning in content, and nobody has the patience for a 1,000-word essay about monetary theory. In his mind, if Bitcoin really is this important, it deserves marketing that can match modern attention spans. His bullishness does not just live in long interviews like this one. It spills into viral images and one-line taglines because he believes more people will understand and benefit if the message is compressed.
If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity.
This is where his personal stake and his vision meet. He is not just holding coins in cold storage. He is building a business model around the idea that Bitcoin can power a new kind of savings account for people all over the world. To him, that is not a niche product. It is a glimpse of a new financial system, one where digital credit and digital capital work together to give ordinary savers a better deal. That mission-based language helps explain why he sounds energized even when MicroStrategy's stock price has been choppy. Stepping back, you can see why he says he is more bullish than ever. In his eyes, supply is tightening into 2035. Fundamentals have improved, institutional tools have multiplied, and the broader world is racing toward an AI-driven, energy-hungry, digital future that Bitcoin fits naturally into. Governments might wobble, currencies might fail, and sentiment might swing, but he believes the network and the asset will keep compounding in the background. Even his approach to memes and credit instruments is part of a larger plan to push adoption forward.
But I have confidence that the United States is going to move from a laggard to a leader in the energy generation business because now we see we need the energy to drive our cars, we need the energy to power up our robots, we need the energy to think 1 billion times faster, 1 billion times quicker, and we need the energy to defend our digital assets like the Bitcoin network. And the only thing that was lacking was the political will.
Hearing all of that, from the digital gold rush clock to the energy and AI backdrop, do you share Saylor's conviction that Bitcoin's best days are still ahead? Or do you think he is overlooking risks that could change this story?